Now, as you just saw, with the U.S. Federal Reserve's decision to raise the interest rates by 75 basis points for the fourth time in a row, central banks around the world will have to react to stabilize their currencies. South Korea's central bank will not be an exception. So without any delay, let's connect with Professor Ji-yeol of Hanyang University's Department of Finance. Good morning, Professor.
Good morning. Pleasure to be on the program.
Well, first, has there ever been 4 consecutive 75 basis point rate hikes in the history of U.S. Fed? It's really an unprecedented time, isn't it?
You're very right to call that this is an unprecedented time. So during the 21st century, we haven't had a single instance where the Fed raised its interest rate by 75 basis points 4 times in a row. So going back historically, the closest parallel that we can find would be Paul Volcker's shock in response to the rising inflation in 1980. So there, within a space of 6 months, the rate rose from 9% to somewhere around 17, 18% in the space of 6 months. But that was a time when inflation was raging high, going from 9 to 15%. So the fact that the Fed engaged in giant steps 4 times in a row is a strong indication that they see this increase in inflation to be a historically unprecedented and serious matter.
Right, and now I guess the big question is, how will they go forward? Many experts have said that this will be the last rate hike of 75 basis points. What is the Fed likely to do in December?
So here the market and the Fed seems to have a little different expectation. So Jerome Powell said at the press conference that this might likely be the last 75 basis points, and that the pace at which interest rates are raised will be lowered from next meeting or the meeting thereafter. But it's one thing to say that the rate increase will happen at a slower rate, and it's another to say that the Fed will pivot, in other words, towards halting the process of expansionary policy altogether. The market have been rallying over the past couple of weeks, anticipating that the Fed may have peaked, at least to an extent, its contractionary monetary policy. But it seems that Jerome Powell's wording that it is very premature is an indication that the Fed is unwilling at this point to ditch the contractionary monetary policy altogether, at least not for the time being.
Right, and each time the world reacts, right? How will the won to dollar exchange rate react to this 75 basis point hike, this one? And will the BOK have to make policies, regarding this decision?
I think that's an interesting question. So the 75 basis point increase, at least, was widely expected by the market. So it will likely have been priced in to the exchange rate itself. The issue is that the market is very uncertain as to how hawkish the Fed will behave from this point onwards. And that was the reason why the market was very volatile post 2 p.m. Eastern Time for the last couple of hours of trading session yesterday, or this morning rather. And $1 exchange rate would also be an interesting thing to look for in the coming days and weeks, not least because the Korean bond market, especially, is far from stable at the moment. So Hyundai Life Insurance, for example, couldn't go for an early repayment on their 5-year rollover of their perpetual bond. That's not something that you observe often. You haven't had an instance like that in 13, 14 years. And this is an indication that Bank of Korea's path towards raising interest rate will be a lot more limited compared to what the Fed can do. There, the job market is much stronger. There, the risk of recession is a lot less pronounced. Whereas here, the corporate bond market, and in fact, local regional government market and the agency market as well, is a lot less stable at the moment. So that's going to be much less clear from Bank of Korea's perspective, and $1 exchange rate as a result will likely stay and remain high for a prolonged period of time.
Well, thank you so much for your insight this morning, Professor, and I hope you have a great day.
Thank you very much.